right, two of my favorite people. Well, at least right now, two of my favorite people. Dagen McDowell joining me. Of course, you know that young lady. And, of course, Michael Block. And I kid you not, I get his Rhino Trading Partners writings, and they're brilliant. And his enthusiasm for what seems like oftentimes the arcane expressed in English, brilliant as well. So we have two people very good at explaining stuff, which comes in handy for me because I'm an idiot. All right, so Michael, I'll end with you. Let me begin with you and your take on this economy, because the market's coming back. There are a lot of people who are going to say it will be the wind at the back of Hillary Clinton or Bernie Sanders, whoever gets the nomination. And that's going to be a big advantage. What do you think?
Yeah, what's going on with the market certainly helps the Democrats here, Neil, and I have to say that. As for the economy, the jobs part is good, and that's what hits people closest to home. Housing, we're starting to hit some bumps in the road here. Dom Index was weak, and those starts and permits, the housing starts and building permits this morning, not good for March, not looking good. There's one data point.
But that's erratic. You guys always tell me that's erratic. It is jumpy,
but this isn't a good number. If it was a good number, all the bulls would be cheering, going, see, it's good. Well, I'm going to sit here and say, you know, it's not so good. Industrial production, not so good. So there's some mixed signals here, and I fear that there's people that are equating this stock market rally, which could be happening for any number of reasons.
Right.
They're equating that with economic explosion here. It's not the case.
You know, Dagen, it said that we vote based on how we were feeling in the summer. In other words, that we always look back. We didn't know in November 1992, when George Bush Sr. was running for re-election, that the recession had ended. But we still had the memory of that recession. Bill Clinton became president. What do you think things are going to look like in the summer then? What would be the snapshot we go on in November?
Plodding along, but you're in an earnings recession right now. The quarterly earnings are the worst in terms of declines than they've been since the end of the recession back in 2009.
And this would be the fourth such quarter in a row, right?
Right, and you have a number of companies that increasingly are looking to cut jobs, particularly in the energy sector. That will continue to play out despite the bounce back that we've had in oil in recent weeks. And I think that with the market, it's even closer to the election. If you have a wild swing in the market to the upside or to the downside, we're talking about September, October time frame.
We know what it did in 2008, don't we? So
well, the
market
world was coming to an end. And also it was the rhetoric out of Washington. It was the John McCain suspending the presidential campaign to go back and fix the economy, which he then didn't do and left to the hands of literally Hank Paulson and Nancy Pelosi. So that hurt him too.
You know, Mike, if you look at it, we're grateful for so little. I mean, this comeback in the Dow that you alluded to has lately been on the heels of the bank and the bank stocks. Yeah. Even though to a bank they reported horrible numbers from a year ago, but better, I guess, than expected. So we're grateful.
As you guys have just said, you know, for a year now we've had these bad earnings. The bar has gotten so low in terms of expectations. If you could slip over that bar, like say a Goldman Sachs did this morning, you're going to be okay.
That was an awful report.
Yeah, it just doesn't look good. Trading down, equity trading not looking good. With what Jacob Lou's doing at the Treasury, the big mergers are gone, so a lot of the big advisory fees may be going away.
So why did we ignore that?
We're ignoring that because expectations got so low. Ironically, we're doing that in the context as we're approaching the stock market highs. Why is that happening? It's happening because in February, the world was purportedly coming to an end. When it didn't come to an end, you had people continuing to shovel doubt onto the situation. Meanwhile, a lot of investors are still sitting on their hands. We haven't even seen them come in yet. Part of the bull case is eventually they're going to catch up.
Part of the problem with stocks right here is they look expensive. Looking at the broad stock market, they're as expensive as they have been during this bull market cycle. And you have a lot of these consumer names. McDowell, for example, is at an hit a new all-time high today. Home Depot, Johnson & Johnson, those stocks, the safe stocks with dividends are increasingly looking crazy.
Those companies are executing, though. I was looking at the utility stocks this morning. If you look at that industrial production report from March, utility output is multi-year lows here, yet those stocks are doing well. Why? Because they average a 3.5% dividend yield in a world where we have the 10-year note yielding 1.7%. Where are you going to put your money?
So somebody's wrong. Either bond investors are wrong or stock investors are wrong. Because I think, right? Because people would not be crowded into the 10-year Treasury if they thought the economy was off to the races.
Individual participation, how are individuals doing on this? We were told even through the whole run-up it's been low.
They've gotten more bullish, but it's not a huge extreme here. They've gotten more bullish in the past 2 months. There's no extremes here yet. Everyone's not back in the boat yet, or in the water, or whatever analogy you want to use.
Well, who'd be better for the market? I'm sorry. Who'd be better for the market, real quickly? I'm looking at the front runners, Donald Trump or Hillary Clinton?
I don't think you can. I don't think you know. I don't think anybody knows what a President Clinton or a Trump or a Cruz or a Kasich or a Sanders would really do when they're in office, and it all depends on who takes the House and who still takes and who runs the Senate.
I'm with Dagen in that we really don't know. If we get a centrist Clinton,
So none of you are going out on the line
Bill Clinton was the era of good feelings. Markets made the new highs. We saw it happen.
Well, he was very pragmatic in the
Trump's
end.
a business guy. Does that mean he's going to be good for business? Not
I don't know, but he's anti-trade, right?
He's anti-trade. That's no good. I don't like that.
Can I ask you a favor? When my new book comes out, Tips for Better Summertime Tomatoes, can I come on and talk about it?
No, I found you to be rude and condescending. And this gentleman is a giant in the business, was not. So I feel a little offended by your comment. I don't even know what that means. All right, they are the best. Good sense of humor both.